So, what if you could find incredible companies way before anyone else even knew they existed? Well, that was pretty much the life's work of Philip Fisher, a true giant of investing. His book from 1958, Common Stocks and Uncommon Profits, wasn't just some book. It was the very first investment book to ever hit the New York Times bestseller list. And it became like required reading for legends like Warren Buffett. But Fisher's ideas, they weren't just influential back then, they are absolutely timeless.
But who was the actual man behind the legend? You know, if you ask his son, Ken, Philip Fisher was anything but your typical Wall Street guy. He was this intensely solitary figure. Seriously, he walked so fast to the train station that the local shopkeepers called him the Flash. And get this, if someone dared to talk to him on his commute, he'd just bluntly tell them he was working and go right back to his reading. He was, just as his son put it, a gunslinger of his own creation.
And it was this brilliant, kind of obsessive intensity that led him to a completely original way of looking at companies. So, what was his secret? Right? How did this solitary gunslinger come up with a philosophy so powerful that it's still guiding some of the world's best investors even today? Okay, it all starts with his most famous concept, something he called the Scuttlebutt Method. And no, this is not about listening to rumors or hot tips. For Fisher, this was a systematic, almost investigative process. It was really about playing detective to uncover the real story of a business.
Fisher's core insight was actually pretty simple. You can't truly understand a company by just talking to the executives. Come on, they're always going to give you the polished, PR-approved version. He was convinced that the real, unvarnished truth comes from that whole network of people who actually deal with the business, day in and day out.
So how did this detective work actually happen in practice? Well, Fisher broke it right down. First, go talk to the competitors. Are they genuinely afraid of this company, or do they just kind of laugh it off as a paper tiger? Next, you talk to customers and suppliers. Are the products really as good as the annual report says they are? Do they pay their bills on time? And finally, talk to former employees. Now, they can give you an incredible inside scoop, but Fisher warned, and this is a big one. You have to check their biases. Were they let go for a good reason, or did they leave because of a real, festering problem inside the company? But Scuttlebutt was really just the first step. Once Fisher had all this intelligence, he'd measure the company against his legendary 15 points checklist. Now, we're not going to go through all 15, don't worry, but they basically boil down to 3 essential themes that really get to the DNA of a truly great business. First up, he was looking for what you could call a future-proof business. Fisher was not interested in a flash-in-the-pan company that was hot for a year or two. He wanted businesses with products that could keep growing for decades. And the key to that? A relentless, hardcore commitment to R&D. Was the company already creating the next generation of products to fuel that future growth? If not, to him, it was just a ticking clock. Next, it was all about the people. You know, a company run by a single, brilliant founder was actually a red flag for Fisher. I mean, what happens when they leave? He looked for deep management talent, a culture that actually empowered its employees, and above all else, absolute, unquestionable integrity. He knew that if the managers don't feel a genuine sense of responsibility to their shareholders, sooner or later it's the shareholders who are going to pay the price. And finally, he looked for superior profitability. I mean, all the sales growth in the world means absolutely nothing if it doesn't translate to the bottom line over the long haul. He was obsessed with profit margins. Was this company just more efficient than its competitors? And was its management focused on building sustainable, long-range profits? Or were they just chasing those quick, flashy gains that you know can't last? Now, finding the right companies was only half the battle. Just as important, maybe even more so, were Fisher's don'ts, a set of contrarian rules that just flew in the face of Wall Street's conventional wisdom. This stuff really set him apart. This is one of his most famous. While basically everyone else was shouting diversify, 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 Fisher argued that it was a trap. He believed investors had been so oversold on the idea that they ended up owning a tiny bit of everything, but knowing a whole lot about nothing. For him, that was the real risk. You see, Fisher's whole philosophy was built on 2 things: concentration and patience. Forget trying to time the market. His goal was to find a handful of truly great companies and, as he famously put it, hold them for a long, long, long time. This was the absolute polar opposite of the constant in and out trading that was common then and is still common now. This discipline went all the way to selling. Fisher had only 3 reasons to ever sell a stock. 1, he admitted he made a mistake in his original analysis.
2, the company itself had gone downhill, or 3, he found a demonstrably significantly better investment. Now, notice what's missing from that list: the stock price going up. For Fisher, taking a profit just because the stock had a good run was a terrible, terrible mistake.
So after all the scuttlebutt and the checklists and these contrarian rules, what does it all really come down to? Well, Fisher's entire philosophy, this relentless focus on the future, can pretty much be distilled into one single powerful question.
The story goes that James Michaels, the legendary editor of Forbes magazine, met with an aging Philip Fisher. And after their conversation, Michaels, a guy who had spent his entire life analyzing businesses, managed to boil down everything that made Fisher's approach so unique into one simple, penetrating question. What are you doing that your competitors aren't doing yet? The emphasis on that final word, yet, is everything. It's not about being better today. It's about creating the future. A company that is constantly asking itself this question never gets complacent. It's always innovating, always pushing the market forward. This one question gets to the absolute heart of what makes a business truly great, and it's the ultimate takeaway from the incredible mind of Philip Fisher.